So that, to me, is the major reason why we're going to see gold and hard assets reveal the true value of things. Wednesday, January 18th, 2023, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at why gold and hard assets or commodities are going to be the true revealers of wealth in the coming years and decade, probably, as interest rates keep going higher and as bond prices continue to drop. Before I start, though, I'd like to say we're going to do some of your questions from last week at the end of the video, and I will also be showing, just before the questions, a clip of Rudy, and you can see how fast is growing, a little video of Rudy. Rudy, of course, for those of you who don't know, will be the new puppy joining our home in February after the passing of Billy, of course, which was very sad. Back on the 12th of December last year, Billy was around for 14 and a half years, and he used to sit on that sofa for almost every video, I would say. So, yeah, I want to talk about gold and also hard assets being a true revealer of wealth, but in more particularly gold, of course, because gold has been a store of value, a measure of wealth, a method of payment, a currency for thousands of years. And I'm not forgetting silver either, but I think gold will be more important. Some of you might have a different view of that, but I have silver too. But we'll focus on gold. And silver will also be part of that equation, I would say. So quickly, look at what the Bank of Japan did a few hours ago, overnight. And that's got everything to do with this topic. So Kuroda, who's retiring come April, he's just kicked the can down the road. And yesterday I said that the Bank of Japan had done another $150 billion of QE since their last meeting on December 20th. But I was wrong because they've actually done 265 billion, which is crazy, 34 trillion yen. And that's 6% of GDP. And I've gone through this article this morning here about what they decided. And even the analysts in the mainstream are saying this is not sustainable. The Bank of Japan can't do this. So the new governor is going to have his hands full. Don't know, it could be a her. I doubt it in Japan. But yeah, I said yesterday, après moi le déluge, after me, the flooding. And I think that's exactly what's going to happen come April. So he announced, Kuroda, or the Bank of Japan announced that they're going to keep the yield curve control and they're going to keep doing QE. Necessary QE. So the market saw that as being dovish, and they kept the base rate at minus 0.1. And people say that, oh no, but in Japan you've had deflation. Gold doesn't do well in deflation. But actually the Japanese CPI is at around 3.7, 3.8%. And I would say that prices there are probably rising even higher. I don't think any of these governments are trustworthy when it comes to calculating the cost of living. And as Rafi Faber always says, it's irrelevant a lot of times, the CPI, because it depends on the individual circumstance. If the individual pays a lot of his or her income for shelter, for food, for energy, the CPI is a lot higher. Their cost of living is coming more and more under threat. So yeah, the yen did drop about 2% because the yen had been strengthening because the market has been testing the BOJ. But overnight it didn't. Actually, the 10-year yield dropped to below 0.4. I think right now, as I speak, let's quickly check. It's back up to 42.42. It got back down to like 0.36. Recently, and even yesterday, we saw it go above 50 basis points. And I wouldn't be surprised for the next month until the next meeting if investors and speculators don't come and retest the resolve of the Bank of Japan. And they'll probably do more and more QE. And just have a look at this chart that Tavi Costa published here on social media about how much QE Japan has done. The cost of yield curve control in one chart. The Bank of Japan's balance sheet, assets to GDP now at record levels, now approaching 140% of GDP. As a result, gold in Japanese yen terms is about to make new highs. Bank of Japan balance sheet, assets to GDP. So yeah, I wanted to show you the chart of the price of gold in Japanese yen. We're near the all-time highs, which is around 254,000 yen, as you can see. So now we're going to go into the question of gold being a true revealer of wealth. And we're going to use A Pocketbook of Gold by Jim Sinclair. Some of you have said that this book now is like $150 to buy. I'm not sure if you can go to jsmindset.com, which is Jim Sinclair's blog, and contact them to see if they still have this. But if they have copies, I don't think they do. Unfortunately, I think this book is becoming its weight is becoming almost as good as gold, because it's going to be a masterpiece, seeing what's going to happen, in my opinion. And before we go into the section where Jim Sinclair talks about gold being a true revealer of wealth, just wanted to go through a question someone asked me, actually, about 7 hours ago on the comment sections from Pepperload. And Pepperload said, Monaco64, what is the significance of central banks buying the debt, but also issuing the debt? Is it the same process, i.e. central bank prints money and expects to be paid interest on the bonds? Well, I'll correct Pepperload here. The central banks don't issue the debt. It's the Treasury and the governments that issue the debt. What the central banks do is they go into the secondary market, into the bond market, and buy government bonds. Yes, and by holding government bonds, you do get paid the coupon. But they get paid by the government, not by themselves, because, yeah, it's the government that borrows, not the central bank. So I replied to him the significance of QE, or money printing, or if you want to call it reserve printing, because central bank money within the banking system is called reserves. For those of you who say that central banks don't print money, but they print reserves. So I said it drives bond prices higher and yields lower, thus keeping interest rates lower. You see, these mad central bankers and Keynesians, they think that you need low interest rates forever to keep the economy going. They don't trust the marketplace, and that's why they do that. That's why Kuroda and the BOJ have been doing that for like 20 years. It does so, the central bank, with no real savings, but money/reserves created out of thin air. Unlike you and me, the central bank does not have to do something of value to earn its money. So that, to me, is the major reason why we're going to see gold and hard assets reveal the true value of things. So we're going to go here to page 70. Gold is a revealer of falsely stated wealth. When wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. That depreciation is borne by the citizenry, who are forced to lower their living standards to compensate for both personal economic mismanagement as well as the mismanagement of the affairs of state. Well, we're seeing that in spades. I just saw a headline that strikes in the UK are at 30-year highs. That's part of this mismanagement of the currency. Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate equities affluence. As expenses run out of control, well, interest expenses, just think about that, right? As interest rates go higher and bond prices go lower, it's a vicious circle, and governments are going to be paying a lot more interest expenses. Guarantees to the citizenry also explode as politicians seek to retain the privilege of office. Yes, that's continuing the all the benefits, all the welfare payments, and increasing salaries of public sector workers. And the public sector, of course, has gotten very big. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which one bought certain things no longer does, but wages have not risen along with prices. So yesterday we had the jobs data in the UK, and they said, earnings went up by 6.4 or 6.5%. Well, but today we saw the CPI and the RPI, they're still above 10. I think the RPI is like above 13, and I think the RPI, or the retail price index, is a much better indicator of the cost of living. So they're still losing out about 7%, I would say, the worker or the wage earner. Instead of wealth, citizens get saddled with a big chunk of government debt. Think of the Japanese here as well, i.e. debt created by mismanagement, not just the Japanese, all the major Western countries, while Russia actually only has less than 20% of government debt in terms of its GDP. Not defending Russia, just giving you an example. The result is everyone pays more for food, fuel, and other necessities. Sounds familiar. This book was written 11 or 12 years ago, just after the 2008 crisis. And it's coming home to roost. Government passes on the mismanagement of economic affairs to its citizens by devaluation. Well, devaluation of the currency. As the imprisoned money manager Martin Armstrong has artfully stated, well, he's free now, but anyway, this is what Martin Armstrong said. The decline in the value of a currency is in reality a free market tax, taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state. The corresponding rise in gold, especially when it is a global phenomenon, and it is a global phenomenon. We're seeing gold near all-time highs in all the major currencies. Maybe not so much in the US dollar, but it will get there. As it is now, is in effect a devaluation of all the world's currencies and a restatement of wealth on a global scale, as is both presently and historically evident. The attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. Falsely stated and assumed wealth largely created out of the assumption of debts that cannot be borne must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates, causing a devaluing of the national currency that dominates their wealth. This happens to all currency holders, regardless if they personally assumed any debts. Gold rises because gold is a monetary proxy inversely related to a nation's currency. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. There you go. Debt deflation has become currency inflation. They are one. So I'm going to stop at that, and we're going to look at the markets now. So it's 8:30 a.m. London time. We've got spot gold at 19.12. It's up about $4. The high's been 15. The low's actually been 18.96. Silver is up 30 cents or 1.2% at 25.21. High's been 28. The low has been 23.78. So silver is really range trading here, really, for the last few weeks. Above and below 24. I think it's only a matter of time until it breaks out to the upside. Dow futures is down 9 points. NASDAQ futures down 3. S&P is unchanged. Not much going on there. Currencies are a bit stronger versus the dollar here. The pound is up a third, 123.30. The euro is up 0.5% at 108.45. And the dollar, of course, has risen versus the yen. It has come off from the highs. It's now up 1.2% at 129.73, but it was up as high as 131.60. Dollar is down slightly versus the yuan at 6.76. Let's check the dollar ruble quickly here. Dollar ruble is at 68.70. Pretty much unchanged. To the other currencies, Aussie dollar is up almost 0.2% at 70.26. Dollar's down 0.2 versus the Canadian, 133.63. And the Kiwi dollar is up almost 1% at 64.85. Platinum is up $4, trading around 1,046. WTI crude is up 0.75% at 81.06. Brent is up 0.5%, 86.50. High grade copper is up 1.5% at 4.29. And US nat gas is down 2% at 3.27. Quickly check the bond market. We're checking more and more bond market these days. We used to just check the treasury market. Right now, the 10-year JGB is at 0.41. So they've managed to calm things down there for now. The Japanese central bank. Let's check. The 10-year gilt yield is up 4 basis points at 3.36. The 2-year is up 3 as well, just below 3.50, and that one is important for mortgage rates. And U.S. 10-year yield, I think it's down overnight. It's down about almost 5 basis points at 3.49. So before we go on to the questions you asked last week, just wanted to show this little clip of Rudy. Here you go. So as you can see, Rudy's growing very quickly. That was about a week ago. My wife and I are going to go see him tomorrow, and we going to take delivery of him, if you want to call it that, in February. It's like we bought a futures contract on Rudy, and that it was actually because we put a deposit down, but we're not going to sell that future, of course. Anyway, to the questions from last week. Yesterday we did the first five. We're gonna do six through 10 today. So question 6, dollar reversal pointing to financial and geopolitical trouble ahead. That was the video from that video, and it's from JVIN248. Mario, when you mentioned the Brazilian real, it made me wonder which of the BRICS fiats do you see performing better or maintaining value versus the US dollar for the next 5 to 10 years? G and S is handy, but diversifying a small amount into near future possible reserve currency might have advantages. I think he means gold and silver by G and S. Well, I think gold and silver, yeah, they fluctuate, or the currencies fluctuate against them. If you want to have some fiat, and this is not advice, I think Brazil, Russia, those currencies are going to do well out of the BRICS. I don't think the Chinese currency will do as well as Brazil and Russia. And why is that? Well, because I think Brazil and Russia have a lot more natural resource wealth than China and India. South Africa, I'm not too sure. The management there of the country and the economy is not like 100%, I would say. So I'd stick to the real and the ruble. Question 7 is from the same video from PC. I have a contrarian question. Do you see any scenario where central banks work their way through this without a big upset? I always take note how calm some people are throughout this. Mr. Thompson and yourself, for example. Historically, no, they've never been able to get out of a bother like this, and this is the biggest accumulation of debt that we've had in recorded history, I would say. So I don't think they'll be able to get out of it without any big upsets. And yeah, I guess some people are calm, like me or Clive Thompson, because we know what's going on and we're prepared for it, and there's no reason to fear things. And I've done my research, and I've experienced this back in Brazil when I was younger, and it's not the end of the world. So that's why you shouldn't let it scare you. That's what they want, the powers that be. Question 8, the party is over for UK house prices, part 3. Mario, and this is from Jack Drusus. Mario, is it true that landlords can no longer claim back tax on money they spend on maintaining property repairs? I had a quick look at that. I think what they've done in the UK is that they changed the amount you can claim back in taxes in terms of mortgage and mortgage expenses and things like that. But I think, don't quote me on this because I'm not a specialist, I think you can still claim tax back for expenses related to other things. I think it's landlords are no longer able to deduct mortgage interest from rental income to reduce the tax they pay. It says you will now receive a tax credit based on 20% of the interest element of your mortgage payments. This rule change can mean that you will pay a lot more in tax. So it's only on the interest payment if a landlord has a mortgage. And this is from the same video from King Libella. Couldn't another trend line be drawn between 83 and 89? I'm not disagreeing with your analysis, but if world economies were to go opposite the recent from 17% to 0, and now are headed up in the like manner, the upheaval of world population would be cataclysmic. I think he's talking. This person's talking about the interest rates, the way they're going down. Well, the way they went down from the 80s until 2020, 2021. If they could go up on the same same time frame as it came down, it's possible. But the thing is that we've got so much debt that you could see an acceleration. You could see a huge crisis, like a sovereign debt crisis, and then you can see the whole system implode, and that's when yields spike. I think that's what they're trying to do, King Libella. They're trying to keep it from doing that. Whether they succeed, we'll have to wait and see. Question 10, from the same one, the party's over for UK house prices. This is from Spock 2024. Mario, are the banks, government, or both that restrict a Briton from taking out longer mortgages? I think in the UK you can take 30-year mortgages or 20-year mortgages. You can't fix the rate for that long. A lot of times you do it for 2 or 5 years and then you have to renew it. I think that's what you mean. Or do you mean taking on perpetual mortgages? And I think in Japan they're thinking about that. Mortgages that you can pass on to your children. I think that would be a bad idea. But yeah, it's usually the banks and governments who regulate this. So there you go. We're going to stop at question 10. We'll continue tomorrow to the other questions. And so I wish you all a great rest of the day. Take care. Bye.